Hello guys, and welcome to my YouTube channel once again. Alright, so in today's video we're going to be analyzing one of these pairs, recent pairs on derivative. This is drift switch index 30. Alright, drift switch index 30. And I want you guys to always take note of this thing. I've been preaching and preaching on my channel, on my videos, that if you guys can just stick to it, you'll be successful in trading. You'll be seeing profit. All right, and I'm so glad that I'm seeing some reasonable results from some of my students. They are really making it. All right, it doesn't matter if you do not make up to $1,000 in a week. You don't need to make $500 a week to be successful. But if you can be regularly making withdrawals from the reef, let's say even if it is $100 in a week, $20, $30, $50, depending on the capital you are putting in, your account size, then it is good. It's better than depositing every week, and gradually you'll build that confidence to be taking trades that you will hold for a certain time, then make bigger profit, or going into trades with bigger lot sizes. So it's a gradual process. All that I'm happy about is the fact that you are seeing results. All right, so that is it. The same thing I've been preaching to you guys is always happening on all kind of places, like I used to tell you guys. All right, now I can analyze this particular chart in so many ways, guys, in so many ways, because everything is very obvious on the chart. The problem with so many persons is that once you open the chart and maybe you are too tied to a particular pair or certain kind of market, and then when you open the chart, you can't easily find the setup, then you are just done for that day. And maybe you're not even done. That's not even it. They might even want to try to force trades to happen, force the market. You are seeing something that looks like the setup you're supposed to trade, which actually is not the setup. You should trade. You don't want to let that day go. You understand? And sometimes it doesn't easily happen, so it's a problem. But if you can go through different pace, trust me, you will most likely find a possible setup that will make you so much profit. Right now, like currently, you can see there's a very high chance, a very high sell setup here on this pair here. On this particular pair, you can see on this 4-hourly time frame, there's a very high sell setup here based on my strategy. For those who understand the continuation strategy, you know what this means. The market is creating higher highs. In a bearish market, you see the market creating higher highs and higher lows. What do you want to see? It's a breakout. It's a breakout to the downside, and the market will continue selling because it has been selling previously. And this thing has been happening throughout the chart. Guys, let me just go back to where we were looking at before I got here. What's wrong? Let's try a bit Steve. Let's see. Okay, right. This particular spot here. Let's look at this. Let me get the arrow line too. All right, so I actually did not come to do this. Don't want to make this particular video about what I want to show you now. I wanted to do a video on trend lines, some secret stuff about trend lines. But when I opened this chart, I came across this stuff, and then it interested me to try to use it to explain some little things that will help you succeed if you're actually following my strategy. Because some persons will find it difficult. I don't know how they see it, but trust me, with the explanation you're going to get from this setup here, from this chart, your trading experience will improve. All right, so just watch this video to the end, guys. All right, so first of all, you can see what the market did right here. You see we are on the 4-hourly time frame. We are on the 4-hourly time frame, and the sense of doing most of this analysis on the 4-hourly time frame and finding setups on the 4-hourly time frame is to try to ensure that you have a high probability trade setup. All right, to have a high probability trade setup. For example, now you can see we have a double top at this point. This is a double top, guys. Market got to the first time, then the second time, then the market has been rejecting this zone. Finally it broke through it. At this point, it did not easily break. You can see when it broke the first time, they were just wicks here, just candlestick wicks, then returned. This is when the market finally broke through this zone. Then you can see the nice sales. This 4-hourly time frame. So entering trade on this at this point and taking all these candlesticks is massive, guys. It's massive. You won't understand until when you until you know. So let me tell you guys what so many people don't understand. You don't need to hold trades from here down to here before it makes you a professional trader. There are people that are trading just 5 minutes. They trade just 5 minute scalpings, and within that 5 minute scalpings, they leverage so high that they make thousands of dollars within that 5 minute trades, and they are good with that. They make so much profit. All right, so trading, holding trades from entering a trade at this point and taking profit somewhere around here or even here is enough profit, guys. Depending on your account size, is enough profit depending on your account size. And how would you know the market will want to change direction from this zone? look at what the market did. It bought nicely. You can see the green candlesticks we had here, so many. From here you start having many bearish candlesticks. You can see the red candlesticks started coming in. This is an indication the market was going to sell. Then it finally sold. So at first you take a trade at this point where we have this double top here, and there's a breakout. So you wait for the market to break out from this double top at this point. Then you get your entry. Then you say to wherever you want to take your trade to. But one thing is this, I'm not going to do a full analysis. If I want to do a full analysis, I will have to go to a daily time frame to see where the market will possibly sell to. Maybe there is a support zone somewhere, because from what the market is doing here, it means there is a support zone down here to the far left. All right, so if I zoom out, I would see that, but I'm not ready to do that yet. So just understand that you take your profit and trace if there is a support zone somewhere to the far left, a strong support zone that can reverse the market. Then you take your profit as it approaches that zone. All right, then you can see the market did what? It started buying again. The market started buying again. Mind you, there was a change of character here. There's a change of character. The market started buying again, creating higher highs and higher lows. See the way the market moved. This also indicated the market was going to sell. At this point, what do we want to see? The continuation setup, guys. This is the continuation setup here. It's all over the chart. This thing is all over the chart. You can see this. Now, on market getting to this same high, this is the previous same zone the market sold from when it created this double top. Now it got back to this top and created another double top. Now this is the first top, this is the second top, and then the market sold nicely, getting to this zone. Remember I told you there's the base of a pattern like this is a strong support zone. Market got to this zone, you see the reactions, it bought up to do a kind of a retest, and after retesting, what did it form? A head and shoulders pattern, guys. You see this is a head and shoulders pattern. Then the market sold massively to the downside. It broke through the zone, did a retest, and continued selling just like that. It continued selling just like that. And also, if you look at here, we also have the market creating higher highs and higher lows somewhere here. Though it doesn't look very clear, trust me, if you go down to the 1 hourly time frame or the 15 minutes time frame, you'll see that the market was creating higher highs and higher lows. And this signifies the market will be selling. In the bearish market, you're seeing higher highs and higher lows. Expect the market to break out to the downside and continue selling. So if you go to the 1 hourly time frame, you'll see that there was actually higher highs and higher lows that indicated the market was going to sell. So I can easily place this right here. And what did the market do? You see it broke out and sold nicely. All right, so this thing goes on and on the chart. Understand? We have another one right here. Let's just pick it. All right, it's another high. This one is a very clear one. Higher highs and higher lows in a bearish market. What do you get? Market sells to the downside. Guys. Very simple. All right, so the same thing is what is happening right now. This is what the same thing that is happening right here on the chart now. So what are you waiting for? You want to ensure the market is here on, because right now there's a little trend inside here which the market doesn't seem to have broken out successfully. Let's look at it. Let's look at it. There's a little trend. So you can see the market has been buying from from the trend line I just drew. I would want to go to the 1 hourly time frame. Meanwhile, on this 4 hourly time frame, you can see after it broke and the last 4 hourly candlestick broke and closed below that trend line, the next one is still buying. But overall, we are expecting the market to sell. Now, my concern about this particular spot here is that if you cannot find an entry here while the market is still here, then you better wait for the market to break out and you find an entry. Or you wait, the market, since it is rejecting here, there is a chance it might still buy, get back to this zone to create a double top, then it sells. So those are the two. You have to anytime you're analyzing the chart, the market, always trying to have two things at the back of your mind. The market might either go respect your setup, or it might either go the other way. Now, if and those two analysis, the analysis must include the fact that if the market doesn't break through this side, then it breaks through this side, then you know what to do if that happens. Because we're having this structure here creating higher highs and higher lows indicates the market will be breaking to the downside. Then the time it's going to break into the downside is what we are not sure of. But from the structure we are seeing here, the market is trying to buy because of the rejections we have down here. So the market most likely might likely buy to this zone here, and you see this zone is actually linked to, I think this should be a previous resistance zone, right, or a supply zone. So the market might want to sell, buy to this zone again, and on getting to this zone it can form a double top, and forming a double top you can get your entry right from the second top. You can get your entry right from the second top and you sell to the downside. And while selling, do not forget there is a trend line here. Although this trend line is irrelevant when the market, if the market should get to this trend, this zone, the second time to sell, this trend line here will not be relevant enough to hold it. The only thing the market might want to do might just sell to this particular zone right here. Let me duplicate this. The market might sell to this zone right here, then start reacting around this zone, and on reacting to along this zone, trust me, the market can decide to buy again to create another head and a kind of a head and shoulders pattern, or it can decide to break through it, close below, and continue selling as it was as it has been selling. All right, so those are the things you have to consider when you are doing your analysis. Do not just be sure of the direction of the market. Just based on your analysis, know that, have at the back of your mind, if the market doesn't go in this direction, then if it goes in this direction, I should be able to enter trade at this point. If it goes in this direction, I should be able to enter trade at this point. Although while doing your analysis, there must be a particular direction you are convinced the market will most likely go. All right, so while we are trying to consider two scenarios, is because of the fact that the market is not perfect. Sometimes your analysis, no matter how good it is, the market does not know what you do, it doesn't respect it. You understand? So since it is something you are you are predicting, then when you are predicting, you have to have another you have to have a backup plan, so you can also enter the trade if the market doesn't go your direction. All right, so let's say I say I'm expecting the market to sell from this zone. The market is on this zone. I'm expecting the market to sell. The market gets here and doesn't sell, then breaks out and close above and retests this zone, then I'll have to buy. You understand? Those are the things you have to have at the back of your mind. All right, guys, so if you go down to the 1 hourly time frame, let's see what we have on the 1 hourly time frame. All right, so on the 1 hourly time frame, you can see what is really happening. The market seems to be after this, let's see, this looks like an impulsive sell, then this looks like an impulsive correction, and the market, if this happens, then the market would be buying. So I am saying that if the market can nicely close above, because this seems to be a little zone somewhere here, market has been rejecting this same zone. All right, so if the market can close above this zone, then it would want to buy to target this somewhere around here, then at this point you can find an entry to sell the market down towards this trend line here, and it will most likely sell below. And if you go down to the 15 minutes time frame, trust me, you'll find a better setup, a better entry opportunity for that trade. All right, find a better entry opportunity. But regardless of that, based on the 15 minutes time frame analysis, guys, you can see what is happening on the 15 minutes time frame. You can see what's happening on the 15 minutes time frame. We have head and shoulders pattern here. We have a head and shoulders pattern here. This is the left shoulder, this is the head, this looks like the right shoulder, and this looks like there was a breakout, then the market is coming back to retest, and in that case the neckline would be here. If you see this, the neckline will be here. All right, then so what happened? The market broke through this zone, did a little candlestick retest, then it's sold, then it's coming back. You can see it has broken above. So we are expecting the market to do what? To buy, because there is another trend line somewhere here. I'll just fill this chart with trend lines, guys. I'll just fill this chart with trend lines. You learn to remove some of them when the ones you do not need at the moment, you can just remove them. For example, this one here, I duplicate this and I put this here. So you see that with this, we have a confirmation that the market would be buying to the upside. All right, the market will be moving to the upside. So if the market can, as it is trying to buy to close above this zone. If it buys and close above this zone, then and maybe retest this zone, But the main, you can buy from there, but the main zone I'll want to see the market go above is this particular one here. If the market can go above this particular zone, then it will be a nice opportunity to buy if you want to buy. But since the overall setup on the higher time frame is pointing to the downside, I would want us to be patiently waiting for the market to actually get to the zone we expect it to. Understand? Wait for the market to get here. Once market gets here, you find your entry, then you sell nicely. You sell with peace of mind. I mean, you'll be selling with so much happiness because the market will most likely sell and sell and give you so much profit. Mind you, this pay is not that volatile. Is the thing is a less volatile pay. The minimum lot size is 0 point, let me see, 0.5. No, no, okay, let me see, 0.1. Okay, that's the minimum lot size, 0.01. All right, and if you enter a trade, let's say from this zone here, and you're targeting down here, wow, only $3 profit from this zone. So if you have a small account, you can just use this to practice. You have a small account, maybe $2 account, you can use this, because even if your lot size, your stop loss is somewhere here with the minimum lot size, it's only 56 cents you're risking, right? Then if the market sells down to TP, you're making 3 USD. It's only if you have a reasonable account size, you can decide to use maybe 0.5, to get reasonable profit. All right, so that is it. Is not a volatile pay that much, so you can just make some profit from this particular analysis, guys. It's very simple. Remember, the market is not actually your friend. All right, so as it is now, guys, just watch out for this setup and let it play out. Remember, this is a setup that has been same thing that has been playing out all along, all throughout the chart. Is available here, guys. So be patient enough, let it play out, then you can make some good profit. All right, so like this video, share your thoughts in the comment section. There's a link in the description. It's going to take you to my Telegram channel. If you want to roll in my one-on-one mentorship, then there is no problem, guys. All right, when you get to the Telegram channel, you'll find my direct contact. Then you reach out to me so we can discuss and then schedule your classes once you've met the conditions. All right, then subscribe to this channel if you've not done that yet, and we'll see you in my next video. Stay blessed and peace out.